What's up, money warriors? Today we are diving headfirst into a stock that just exploded, sending shockwaves across Wall Street. I'm talking about SoFi Technologies, ticker symbol SOFI. And believe me, you need to hear this. They just dropped their latest earnings report and it was a jaw dropper. But here's the real talk. SoFi CEO made a wild, bold claim that could either make investors rich or lead to a massive crash. I'm going to reveal exactly what he said and what it means for you if you're thinking about this stock. Make sure you stick around because the most critical piece of information about this stock is coming at the very end of this video. You don't want to miss it. All right, let's jump right into it. SoFi just had what analysts are calling a blowout quarter for the second quarter of 2025. This company didn't just meet expectations, they absolutely crushed them. First up, their earnings. They reported 8 cents per share, which was way better than the 6 cents per share Wall Street was expecting. That's a huge win, especially when you consider they only made 1 cent per share in the same quarter last year. That's an 800% jump in earnings. They've actually been profitable for 7 quarters in a row now, which is a big deal for a growing company. Now, let's talk about money coming in. Their adjusted revenue hit an incredible $858 million, easily surpassing the roughly $804 million forecasted by analysts. This isn't just a slight beat, it's a massive 44% increase in revenue compared to last year. That's their fastest revenue growth in over 2 years. Think about that. Almost $500 million more flowing into their coffers than last year in just 3 months. And it's not just about money, it's about people. SoFi added an astonishing 850,000 new customers in just this past quarter alone. That brings their total customer count to a whopping 11.7 million, marking a 34% growth year over year. And guess what? Their products, that's all the different services their customers use, like banking, loans, or investing, also shot up by a fantastic 34%, reaching 17.1 million. They're on track to add at least 3 million new customers this year, aiming for around 30% annual growth. But wait, there's more. SoFi is primarily a lending company, and their loan business is on fire. Personal loans skyrocketed by 66% to $7 billion. People are flocking to SoFi to combine their high-interest credit card debt into cheaper loans. Student loans jumped 35% to $1 billion, especially as federal programs wind down. And get this, home loans nearly doubled, surging 92% to around $800 million, even with crazy high mortgage rates out there. They originated a record-breaking $8.8 billion in loans this quarter. This shows they're not just growing, they're growing incredibly fast across all their lending areas. And this growth is being managed smartly because their charge-off rates on personal loans actually fell, showing they're getting better at managing risk. So how are they doing all this? It's simple. SoFi isn't just a student loan company anymore. They've been on a mission to become your one-stop shop for all things money. Imagine managing your checking account, savings, investments, loans, and even getting financial advice all from one app. That's SoFi's vision, and they're executing it brilliantly. A huge part of their success comes from getting a federal banking license in 2022. This might sound boring, but it's a game changer. It means they can access cheap money through customer deposits, which helps them offer competitive rates and boost their profits. It's a major competitive edge over other financial tech companies that don't have this. Their strategy is like a financial land and expand model. They bring in new customers with appealing, low-fee products. Then, once you're in, they try to get you to use more of their services. For example, over a third of their new products this quarter were opened by existing customers. This isn't just about making more money, it's about building strong, long-term relationships with customers who trust SoFi with more and more of their financial lives. They're also making a ton more money from fee-based revenue. This is money they make from services other than just interest on loans, like their investment platform or financial advice tools. This part of their business shot up by 72% this quarter. This is crucial because it makes them less dependent on interest rates and adds stability to their earnings. They're becoming a lot more than just a lender. SoFi isn't just focused on today. They're betting big on the future. They're making major investments in cutting-edge tech like artificial intelligence and blockchain. They're launching blockchain-powered international money transfers that will be lightning fast, available 24/7, and completed in under a minute. Think about how that could change how people send money around the world. They're even getting back into cryptocurrency trading, a service they had paused before. Now, with their banking license, they feel they have a huge advantage in this space. And with AI, they're developing tools like Cash Coach, which will act as a personal financial advisor, helping you manage your money better. Expect more coaches for spending, saving, and investing soon. Their CEO, Anthony Notto, summed it up perfectly in a recent interview. He said, and I quote, "Our products and services will be better in the future than they are today. This is the worst they'll ever be." Now, that's a bold statement. He's basically saying SoFi is only going to get better from here, fueled by these tech innovations. And Wall Street definitely reacted after the earnings report. SoFi stock went on a tear after the earnings report, surging anywhere from 7 to an incredible 18% in early trading. Options traders were expecting a big move around 9%, but SoFi blew past even those high expectations. The stock has been on a serious upward trend this year, climbing about 35% year to date and an amazing 120% since early April. They also raised their full-year guidance for 2025. They now expect adjusted revenue of about $3.375 billion, which is higher than their previous forecast and what analysts were expecting. They boosted their earnings forecast to 31 cents per share. This confidence from management is a huge reason for the stock's rally. But here's the critical information you need to understand before you even think about jumping in. All right, you've seen the incredible growth, the record numbers, and the ambitious plans. So, should you buy SoFi stock right now? Here's where it gets interesting and, frankly, a little complicated. Wall Street analysts are pretty divided on SoFi right now. While some are very bullish, praising the positives across the board and giving it buy ratings with price targets as high as $27 or even $30 per share, the overall consensus for analysts is actually a hold. And here's the major warning. The average analyst price target for SoFi stock is only around $17. That means many analysts still see a potential downside of about 20 to 28% from its current price, even after this amazing earnings report. Keep in mind, these average targets might change now that the earnings are out, but it shows there's still significant caution. Why the hesitation? Because of the valuation. In plain English, the stock is considered expensive by many. The stock's price is around 51 times its earnings. To give you some context, the average stock in the broader market, like the S&P 500, trades at 23 times earnings. SoFi is more than double that. It also trades at about 8 times its total sales, while the average S&P 500 company trades at 3 times sales. This high price means that if there's even a slight stumble in their next report, or if the overall market hits a rough patch, SoFi stock could be very vulnerable to big drops. History shows this. During the inflation shock of 2022, SoFi stock plummeted by over 80%, while the broader market only fell about 25%. It's a stock that has shown extremely weak resilience during downturns. So while SoFi is a dynamic, innovative company with incredible growth and a bold CEO, you have to weigh that against its very high valuation and its historical sensitivity to market downturns. If you're a long-term investor, you need to be ready for potential ups and downs, but the growth story is undeniable. The CEO's claim that this is the worst they'll ever be sets incredibly high expectations for the future. That's a wrap for today's deep dive into SoFi. What do you think? Is SoFi a buy, hold, or sell after this news? Let me know in the comments below. If you found this video helpful, please hit that like button, subscribe to the channel for more financial insights, and don't forget to ring the notification bell so you never miss an update. Until next time, keep making smart money moves.